This episode recalls earlier clashes between US presidents and the Fed. Lyndon Johnson reportedly bullied then-chairman William McChesney Martin over Vietnam War spending. Richard Nixon pressured Arthur Burns to keep rates low ahead of his re-election campaign. Both episodes are now remembered as cautionary tales of political interference leading to runaway inflation. Powell's defiance, therefore, situates him in a long tradition of central bankers resisting presidential pressure. Yet never before has the confrontation played out so publicly, amplified by Trump's penchant for social media attacks and his willingness to personalize disputes. On the day of the announcement, cameras captured Powell walking into the marble-lined press briefing room at the Federal Reserve headquarters in Washington. The US and Federal Reserve flags fluttered atop the building, the carved eagle emblem casting its long shadow above the entrance. Reporters crowded the hall, eager for any hint of whether the Fed had bent to Trump's demands. Powell, typically reserved, struck a firm tone. He explained the rationale for the modest cut, reiterated the Fed's dual mandate of price stability and maximum employment, and dismissed speculation that politics had guided the decision. On the streets of Los Angeles and Baltimore, reactions reflected the broader divide. In shopping malls, some welcomed even a small cut, hoping it might ease credit card interest or auto loan rates. At the Port of Baltimore, business leaders pointed to containers piled high, warning that trade tensions were choking exports and imports alike. Among ordinary homeowners, the impact may be less immediate. Mortgage rates had already drifted downward in anticipation of a cut, but a quarter-point move will not transform affordability overnight. Still, for a market long accustomed to historically low rates, even incremental easing is seen as a step in the right direction.